The US and China reach a deal to ease export controls, but markets don't seem totally satisfied. Well, after 2 days of talks in London, US and Chinese officials have agreed on a framework to get their trade truce back on track and remove China's export restrictions on rare earths. But there seemed to be little sign of a durable resolution to long-standing trade tensions. Both countries agreed in Geneva last month to slash their respective tariffs by 115 percentage points and provided a 90-day window to resolve the trade war. Well, Russ Mould is investment director at AJ Bell. Russ, the car industry must be breathing a sigh of relief after the export curbs on rare earths were lifted, but the share price reaction hasn't been that great. Why do you think that is?
Well, I think there are two things. First of all, remember that stock markets have had a huge rally from the lows of early April. So they've been expecting some form of deal, pricing it in, and to a degree, that's hopefully what they're getting now. And as you say, equally, there are still lots of T's to be crossed and I's to be dotted. And the 9th of July deadline on other reciprocal tariffs is still approaching with a lot of the deals not signed. So I think markets are hoping for good news, but still aware of the fact that there could be some reverses along the way.
Now, overall, in your opinion, what do you think after these London talks? Do you think we'll get to an actual proper breakthrough before the 90-day deadline is over?
I'd be pleasantly surprised. I think it's fair to say there are so many different moving parts here, whether it's student visas, rare earths, aircraft, semiconductors, intellectual property, plus the overall issue, you can argue that these two countries are grappling for geopolitical supremacy. So that's not going to be solved by the 9th of July, I can assure you.
Now, let's move on to some economics. And later today, we get the latest inflation data out of the US. What do you think policymakers need to see here at the Fed before their meeting next week?
Well, the Fed does seem still to be on edge about inflation. And in the end, their call that it would be transitory after COVID has proven completely wrong because inflation has run ahead of their 2% target for 4 years. So in that respect, that they're right to be on edge. That I'm told that economists are expecting a small acceleration in the US inflation rate from 2.3 to 2.5%. Lower fuel prices will be a help. The big issue is what do they start seeing from tariffs and what indications do they get that may be a further lasting issue down the road.
Well, let's turn to corporate news now. And the world's largest fast fashion group, Inditex, they own Zara, Pull&Bear and Massimo Dutti, to just name three. Well, their first quarter results were out this morning, and it's fair to say they disappointed. What's going on there?
Yeah, it's interesting. The first quarter results, there was still growth and profits were flat, which admittedly wasn't an amazing outturn. The company did flag that there'd been some improvement in the second quarter of the year, but a lot of it seems to be down to Spanish weather and some unseasonal rain. So I think that's something that we always have to be aware of with retail companies is they are prey to not just wider and long-term consumer confidence and interest rate trends, but the vagaries of weather. So that is an issue. Spain is about 15% of the company's sales, and the weather there wasn't great. And I speak from experience, having spent Easter in Seville.
Now let's move on to Elon Musk. We can't keep him out of the news. And on social media, he says that he regrets some of his comments towards the president. Tesla's share price is still below where it was this time last week, but it has recovered considerably. What do you make of this argument between the president and Elon Musk?
They both have a lot to lose. Trump, you could argue politically and financially. Musk, you could argue politically and financially. Tesla has been a big beneficiary of government assistance for electric cars and through subsidies, for example. And some of his other businesses are big beneficiaries of government contracts. So he definitely has lots to lose. Trump, I'm sure, did feel that he benefited from Musk's money and support. So equally, they will, I'm sure, be hoping for a rapprochement. But equally, you've got two very, very proud, very, very spiky people. And it may end up being one of those situations like Professor Moriarty and Sherlock Holmes on the edge of the Rickenbach Falls in Switzerland. Maybe they take each other over the side.
Now, how important do you think Thursday will be for Tesla when it launches its robo-taxis in Texas?
I think from a share price perspective, it's very important. I mean, in the end, the company has had a tricky run. You've got weak car sales. You've had the head of the Optimus robot business leave. You've had, Mr. Musk's political affiliations causing some upset in some quarters as well. And there is a perception that Waymo does have a lead in autonomous driving and robo. So Tesla needs to be showing something there, and a little bit of good news could go a long way. And also, don't forget, Tesla's market cap is $1 trillion. BYD's is $150 billion, and BYD is expected to make more money this year. So clearly, fans of Tesla are pricing in an awful lot of good news from robotaxis, cyber trucks, and everything else, and robotics that's attached to Tesla, because not just the car business, because otherwise that valuation gap wouldn't make an awful lot of sense at all.
And that was Russ Mould from AJ Bell. And don't forget, you can watch more videos on Reuters.com.